So accounting as a whole is based on one single equation. Accounting is completely based on one single equation, right? That is asset equals capital plus liabilities. Assets equals equity plus liabilities. So that is the main equation, right? Always asset equals equity plus liabilities. So how do we derive this equation? So let me explain how we derive the equation. So what is mean by accounting equation and what is mean by this double entry? So accounting equation is a way to illustrate two facts about a business. Two facts. What business owns and what it owes. What business owns, the asset, and what it owes, what it owes for others, liabilities, right? So entire double entry concept, entire accounting concept is based on this equation, based on this accounting equation. An accounting equation should remain in balance at all times because of the double entry accounting or bookkeeping system, right? So everything what we will do in future in accounting, in all our chapters, we will follow this double entry accounting principle which is derived from the accounting equation. Double entry means that every transaction will affect at least two accounts in our ledger. Every transaction will affect at least two accounts in our general ledger, right? So that is what is meant by accounting equation and the double entry system. Okay, so moving to the next. Examples of double entry. If owner invests money to the business, the asset will increase and owner's equity will increase. Asset and equity will increase. When company borrows money from bank, if we borrow money from bank, we will get cash. Cash will increase and liability will increase. Right? How we derive accounting equation? So what we'll do is we will take the whiteboard. So let's assume that we have an owner, we have an individual person who wants to start a business. So what he do? He will invest money. He will invest money. Let's say he invests 100,000. Then for the business will receive cash 100,000, and it is also a liability to pay that 100,000 to the owner. So we derive an equation. Cash is an asset. Business will have asset 100,000 and also liability of 100,000. Owner invests 100,000 into the business. Then assume that they are also taking a loan from the bank. $50,000. Taking a loan from the bank, 50,000. Then our total asset will be 150,000 because 100,000 from the owner, another 50,000 from the bank. So liability can be divided into two. One is owners, payable to owners, which is called equity. Equity is 100,000. There is an equity of 100,000, and outsiders liability is called liability 50,000. Outsiders liability of 50,000. Now, then the equation becomes asset equals equity plus liability. So you can see liability only we divided into two. Equity and liability. Then we will run the business, we will continue doing the business and assume that we earn a profit. We earn a profit of 25,000. We earn profit of 25,000. Assume all other transactions are, all other factors does not affect. Now we have cash, investment 100, bank 50, profit 25. Now the total asset in the business, total assets in the business is 175. We assume that all other factors does not change, only taking from this to make the explanation simple. Right? So the profit is 25. Then equity. Who will get this profit? Profit will be given to the owner. So equity will be 100 plus 25. It means 125. Equity will be 100 plus 25. Then the liabilities say 50. So we derive the equation asset equals equity plus profit. This is profit. Equity plus profit plus liabilities. Then what is meant by profit? Profit means, how do you calculate profit? Income minus expenses. Profit equals income minus expenses. Then we can substitute this income minus expenses equation for our accounting equation. Then the equation becomes assets equals equity plus income minus expenses plus liabilities. So we derived another equation saying assets equals income minus equity plus income minus expenses plus liabilities. Then further, we can do adjustments for this equation. One is we can take this expense into the other side because of it's minus. To make this a positive value, make this plus, what we can do is we can change the sign. Then finally we derive assets plus expenses equals assets plus expenses equals equity plus income plus liabilities. We derive this equation. Asset equals asset plus expenses equals equity plus income plus liabilities. So this is the equation which we are using for double entry principle. In double entry, it says asset plus expenses. When these two sides, assets and expenses, when the asset and expenses increase, will be in the debit side of our account. We know the account, the format of account, right? It has two sides, debit side and credit side. Debit and credit. So asset and expenses increase. Asset and expenses increase debit side, decrease credit side, and the other three accounts, equity, income, and liabilities, increase will be in the credit side, decrease will be in the debit side. So this is the basic of accounting equation, and this is the basic for double entry principle. So I hope it is clear. We started with the owner investing money in the business, 100,000. And we are taking a bank loan. In the total asset, total cash is 150. Then the liability was divided, owner's liability and outsider's liability. Then we derive the equation asset equals equity plus liabilities. So this is the main equation that we will use most of the questions. And that was expanded. It added the profit, substituted the income minus expenses, and we derived this equation. Then we are coming back to our presentation. Starting with this. Asset equals equity. Then assets equals equity plus liabilities. Then we added profit, income minus expenses. And finally, you can see this was also expanded. Asset can be divided non-current asset, current assets. Liabilities also can be divided non-current liability and current liability. So based on that, we can have many equations: fixed asset plus debtors plus stock plus cash, all these assets. So separately you can make content, and equity plus liabilities also we can have that. Now let's do some questions. Example 1. We have around 9 transactions. We are going to record the transactions in the accounting equation. You all also can take a paper and a pen. We'll start doing it. Right? The accounting equation we are going to use is assets equals capital plus liabilities. Date so date 1st of January. What has happened? Mahindra invested cash 100,000. So our cash will increase by 100. Capital. This is capital. Capital increase by 100. So no effect for liabilities. Only invest cash. Cash increase, capital increase. Then 2nd of January, purchased a motor vehicle. We are giving cash and buying a vehicle. So cash will decrease by 45 because we are giving cash and buying a vehicle. So motor vehicle will increase by 45. So the effect will be in the asset side, only in the asset. 3rd January, cash purchases. We are giving cash, cash minus 30,000 and purchases. So what happens when we purchase? When we purchase, we get stock. Stock will increase by 30,000. Cash purchases. Cash given, stock will be received. Then 4th January, sales, cash sales. We will get cash 48 and we assume that the cost of the goods is 30,000. That means 30,000 worth of stock we are selling at 48,000. 30,000 worth of stock we are selling at 48,000. So our stock will reduce. Now when you purchase the stock, we recorded here. When we purchase the stock, we added into the asset. Now we are selling this. The stock will be minus 30,000. We are getting cash 48,000. And from this transaction, there will be a profit of 18,000. So that we have to read under capital column. Right. 5th of January, obtaining a bank loan. Once we take a bank loan, our cash amount will increase and the bank loan amount will increase by 60,000. Obtain the bank loan. When we repay bank loan, the reversal of the bank loan received, 32,000 cash minus, we are giving cash, bank loan, the liability will reduce by 32. 7th January, Mahinda, owner's drawings. So owner takes money from the business. Cash will reduce by 50,000 and the capital will reduce by 50,000 because when we invest, when the owner invests money, when the owner invests money, it was increasing the capital. If he takes back the money, capital will decrease. Then the 8th January, interest income received. We are receiving cash, 48,000, and interest income is an income. So all the income will be recorded on the capital column because income and expenses will affect the capital. Interest income, 48. Finally, electricity paid. Cash minus 16. Electricity is an expense. Expense will decrease the capital. Income will increase the capital. Expense will decrease the capital. Then after doing all this, you can get the total. You can calculate the total value of each column. Right. So I'm taking the same example to explain the double entry principle as well as ledger accounts and the complete accounting process. So I want you all to write this example. We will prepare until the financial statement using this. Okay. So you all write this with me. Liability is 28. Capital will be 50. It's 48. This is 100. Therefore, this is 128. So this is the answer. Then we need to know how to calculate the profit using the accounting equation. Calculation of profits. Another important part. Can you all tell me the profit? I know for some of you all this is very basic, but from the basic question, I'm going to explain the entire process. Right? Can you all tell me the calculate the profit from this? Just type the answer in the chat box. Profit equals income minus expense. Some says 32, some says 50. But others, simple question, guys. I want everyone to respond. So then only I know that you all are in the class. Because I can't see, physically. So you see, what are the income? We have profit and there is an interest income. So some says 32, some says 50. So we have two income, 48 plus 18. And expenses, there's only one expense, 16. Only one expense. Drawings is not an expense. Drawings is not an expense. Okay, so income 18 plus 48 and only one expense, 16. 18 plus 48 is 66 minus 16. So profit equals 50. So if you put 32, 32 is wrong. Right? So maybe you might have taken from, you might have not taken the profit. That is why you get 32. If anyone got 32, they have taken only income minus the interest income minus electricity. There is a profit. As profit also we need to consider. Okay, so let me explain that concept because most of the students have difficulties in understanding the concept of profit. Right? How we prepare the income statement, how profit is calculated. Okay, so we'll do it after this question. Right? Before that, there is another way of calculating the profits. There is another way of calculating the profits. Right? Another equation. Can someone type the equation? What is the other equation for the profit? Profit equals, what's the equation? Using the net asset or the capital. Closing capital minus opening capital plus drawings minus additional. This is the equation. Profit equals closing capital minus opening capital plus drawings minus additional capital. So how do we derive this equation? How do we derive this equation? That is from the opening capital. I'll put it in another way. We add for the opening capital, we add if there is any additional capital. And if owner has taken money, that will be deducted. And we add the net profits. So if you remember, if you know the balance sheet, if you know the balance sheet equity side, we have capital plus, capital means we take the opening capital plus additional capital, capital plus net profit minus drawings. Right? Then you get the closing capital. Then we get the closing capital. So if you don't know the profit from this, if you don't know the profit, we take the profit out of this equation, right? So assume that our opening capital is, I'm taking a simple example. Opening capital is 100. And the net profit is 50. Then the closing capital is 150. Okay. Opening capital is 100. Right. Opening capital is 100. We are having a net profit of 50 if the closing capital is 150. If you don't know this, how do you calculate? Then what you do, from 150 minus 100, then you get the net profit. If you don't know, if you don't have additional capital and borrowings, you have only the net profit. To calculate the net profit, what we do, closing capital minus opening capital. Then you can get the net profit. We are going from down to up, right? Then let's say you have drawings. Now when you are going in any equation, any of these type of equation, if you are going up, whatever the pluses will be minus. What you add from the closing capital, if you are going to calculate any of this, whatever pluses will be minus, minus will be plus. See in the equation, opening capital was minus because it was a plus. Additional capital is minus because it was plus. Net profit only we will calculate. Drawings was plus because it was minus here, because we are going from down to up. Okay, so that is how we derive this account, the profit equation. Okay, now if we calculate the profit using the capital equation, we calculate the profit using the capital equation, then our profit will be profit equals closing capital is 100 minus opening capital also 100 plus drawings 50. There is no additional capital. So profit equals 50. Simple way. The reason to use this equation, that is important. Why are we using capital equation? Reason to use this equation is mainly we study incomplete records, a chapter called incomplete records. That means businesses don't maintain proper set of books. Businesses don't maintain proper set of books. If they don't maintain books, a proper set of books, then it is very difficult for them to identify the profit. Right? They don't know where the income, where the expenses, what are the transactions that they have made, right? So most of these small boutique shops, they don't know, they don't maintain. If there is a question, how to find the closing capital? Closing capital is this. The final total is the closing capital. Right. Okay, so if they don't maintain books, how to calculate profit? A simple way. If you are an accountant, right? The business says, can you find me how much profit I earn from 1st of January to 31st December? So what you do, the simple way is go on 1st of January, the business. You go on 1st of January to the business and calculate the balance. What are the assets and the liabilities? Assets and liabilities. 1st of January, you go to the business and calculate assets and liabilities. That you can do. We can do a stock count. 1st of January. That normally everyone does a calculation. 1st of January, you go and calculate what are the assets available, what are the liabilities available. Then you go on 31st December and calculate the balances, asset and liabilities. Right? Then ask him if he invests any additional capital, and ask him if he have withdrawn any money. So if you have these four things, then individually you don't need the income. You don't need individual income. There can be thousands of millions of transactions, right? So you're like earning profits, interest income, expenses, salary, electricity, water, rent, right? So you don't need to know any of these transactions that he has done in the business. You just need his balances. So using this, easily you can calculate the profit. So that is the advantage of using this profit equation using the capital. So you don't need to prepare any of the ledger accounts, any income statement balance sheets, right? Trial balance, nothing is required. You only need opening assets and liabilities, closing assets and liabilities, additional capital and drawing. So using that, the difference will automatically gives you the net profit. Difference will automatically gives you net profit. Right? Okay. So we did one of the basic accounting equation and recording them in the equation. let's do this question. Example 2. I'll do it in similar way. So this. Okay. So can you all do this? There are 15 transactions. Can you start doing it, guys? First of March, investment of capital, and we get cash plus 500, capital plus 500. Second March, cash purchases, cash minus 300, and we will get stock 300. In 3rd March, credit purchases. So when we buy on credit, we will get the stocks. We will get the stocks 700, and we don't pay cash. We will have a liability for creditors. So I do it fast. 4th March, cash sales, stock 300. We are giving stock worth of 300. We are getting cash 500. We make a profit 200. 300 worth of stock sold for 500 on cash, and it will give you a profit of 200. 5th March, credit sales. So when we are doing credit sales, our stock will reduce by 250 and we don't get cash, we will have a debtor of 400. This will give you a profit of 150. There's one thing I want to give. Return inwards, right cost. Sixth March. Now, when we are doing sales, what is return inward? Return inward means customers are returning, debtors are returning goods to us. So this is the credit sales. Return inward means return of credit sales. So reversal of this, we will get stock worth of 30 and the debtor will reduce. Earlier debtor increased, now debtor decrease by 50 and the profit will decrease by 20. So normally you don't get this in equation, but this is how you do it. It's okay. Let's go. 7th March. Return outwards. We send stocks to the creditors. 40. Creditor will reduce by 40. 8th March. Giving discounts. We are giving discounts to the debtors. Debtors will reduce by 20. Giving a discount is a expense. Therefore, capital will reduce. Discount allowed is expense. Capital will reduce. So 9th March, discount received. Discount received is an income. will increase the capital by 30. Creditor will decrease by 30. 10th March, obtain the bank loan. So cash will increase by 400. Bank loan liability will increase by 400. March, owner's borrowings. Cash will be minus 80. Capital will be minus 80. 12th March, paid bank loan. Then we pay cash 200, and the bank loan liability will decrease by 200.
Okay.
Then 13th March, received from debtors. We are getting cash 150 from the debtors. Debtor will be minus 150. 14th March, we pay cash to creditors 130. Then the creditors will reduce by 130. So the last one, 15th March, electricity paid. Cash minus 32. Electricity is an expense. Minus 32. Then you can calculate the total. So I want you to tell me the profit. So you don't need to individually calculate the profits. You can use the net asset equation, capital equation. Now in your A-level exam, calculators are allowed. You can use non-programmable calculator. It will make your life easier. is the profit. So it's easy if you take the net asset calculation. Closing net asset minus opening net asset plus borrowings minus additional. Closing net asset is 728. Opening net asset is 500 plus drawings 80. Whatever we deducted will be added. There is no additional capital. Additional capital is 0. Okay. Our answer profit equals 300. Yeah, very good. Right. So I got correct answers from most of it. So same thing only we convert to double entry system and we prepare the ledger accounts and we uh, prepare trial balance and final accounts. So later I'll explain the final account part in the next class. So we did one basic question, one little bit advanced it with debtors and creditors. Then the next type of question that you will get is you will have the equation. Right? You will have this part. This will be given, and you need to identify the transaction. If the equation is given, you need to identify the transaction. How do you do that? That we will do from another example. Then we can move on to past tense. Right. Example 3. Describe the transaction. Make the income statement. And it says These transactions are for Ravana traders for the month of January, except 1 and 6. Except 1 and 6. All other transactions affect the net income. Now, so any transaction affecting net income. What is the meaning of affecting net income? Explain that. Meaning of affecting net income means it is either income or expense. So only income or expense will affect the net income. What is net income? Net income means profit. Net of income. So what will affect the profit? Either income or expense will affect the profit. So that is what it says. Affecting net income means affecting the profit. What is affecting the profit? Income or expense. So except 1 and 6. Circle it. Except number 1 and number 6. All other transactions in the capital column will affect income or expense. That means if you take the second transaction, 60,000, it affects the profit. Capital plus means it is an income. In third transaction also income. And sixth transaction is minus. It affects the profit. Profit is reduced. Profit reduced means it is an expense. So second and third transactions are income, and the sixth transaction is expense. Right, so let's identify the transactions. Number 1. What's the first transaction? It's very simple. Cash increase, capital increase, investment of capital or introduction of capital. 50,000. Introduction of capital 50,000. In the second transaction, capital increase, cash increase, same. Now, if you see number 1 and number 2 are same. But since second transaction affect the income, affect the profit, it is an income. So income received. We can assume it's income received, we can say cash sales or income received. Income received 60,000. You can have anything, rent income received or interest income received, cash sales. Right? 60,000. You can't say additional capital. So yeah, you can't say additional capital for second one. Say additional capital. Why? Because this is what I explained. This affect the income, affect the profit. So affecting the profit means it is an income. So transaction number 2 and 3, both are income. So either it can be rent income or sales, cash sales. You can have it cash sales as well. cash sales also same. In the third transaction, debtors increase, income increase. So this can be credit sales, 20,000. Third one is credit sales or income receivable. Income receivable. In the fourth transaction, we got stock. That means we purchased. Cash given 20 and there is a liability, creditor's liability of 30. So purchased stock worth of 50,000 and paid only 20,000. The balance will be paid later. You can put this into any word, any other sentence. Or you can say cash sales, cash purchases 20, credit purchases 30. And total stock increased by 50. Cash purchases 20, credit purchases 30. And we have given cash fifth one, purchase of equipment 60,000. In the last transaction. Transaction number 6 does not affect the profit. Transaction 6 does not affect the profit. Third transaction, credit sales. Debtors increase means we are selling on credit. Now here you need to understand there are few ways you can record the credit sales. Now third transaction is income. It's a sales it's an income. Third transaction is income. Income which increases debtors, right? So here they have not given the stock value, but only given the sales value without the cost. They have given the transaction without the cost. So this will record only the sales income, not the cost. I will explain this in another next presentation. Okay, I will explain the cash sales, credit sales, recording part after this. Good, you all have asked the question how this becomes credit sales. This is credit sales because data is increasing. How does data increase? Either you can take this as two type of transaction. One is credit sales, another one is income receivable. Any other income receivable, right? So let me explain this after completing this question. So moving back, last transaction, which does not affect the profit, therefore it is a drawings. The first one is capital, introduction of capital. The last one is drawings. So what he withdraw stock worth of 2,000 and cash 1,000. Owners drawings, cash 1,000 and stock 2,000. So is the profit 20? What is the profit, guys? How much is the profit? How do you calculate the profit? Here they have not given the cost of the sales for the credit sales and cash sales. So actually you can't calculate the profit based on this information. If you assume this income, the sales income, the 60,000 and 20,000 as other income, income received, income receivable. Assume that way, you can calculate the profit. Otherwise, they have to give you the cost of sales to calculate the profit. So can you all tell me the profit here? How much is the profit? You have only two income. This is not a complete question. So how do you calculate the profit? So let's prepare an income statement using this. You have only two income, 60 plus 20. Only two income. No expenses. There is no expense. So we can calculate we can say the profit is profit is 60,000 plus 20,000. 80. So if you are calculating from the capital equation, closing capital is 50 plus 60 plus 20 minus 3, 127. So if you are using closing capital, closing is 127, opening is 50, 127 minus 50 plus 3. Okay, if you are using the closing capital balance, 127 minus 50 plus 3. Then you will get the same answer. Equals right. Now we have to move on to past papers. Right. So I'll give around 5 minutes break. Okay. So you get now it's 11:05. I'll give 5 minutes break and we'll start at 11:10. If there is any other questions that you all need to ask, I will be here. So you can ask at that time. Next, I will be doing past papers. Take 5 minutes break and come back. Right. So let's start 2016 A-level. Okay. 2016 paper. Someone conducts a retail business. The draft income statement for the year ending 31st March 2016 reported a profit of 600,000. This draft statement of financial position showed a cash balance of 50,000. However, he does not maintain books of accounts properly. It was revealed subsequently that the following transaction had not been recorded in the books of accounts. So first task is to show these transactions in the accounting equation. So there are 10 transactions. If you see required, show the impact of these transactions in the accounting equation and state whether each value increase or decrease in front of the value. Use a format similar to the one given below. So you have transaction number, assets, liabilities, equity. Asset has been divided into PPE, inventory, trade receivables, and cash. Liabilities, long-term loans, trade payables, other payables. And finally, the equity. Number 2, calculate the revised cash balance. After doing this, after recording this, what will be the cash balance? Third one, revised profit for the year based on the net effect of transactions on equity. Okay. So can you all record the transactions in the equation? So do it like this. So the first transaction, what happened? Sale of goods on credit for 80,000. The cost of the goods were 60,000. So our stock reduced by 60. Inventory reduced by 60. And we are getting a debtor of 80. And the profit is 20. So we are doing in thousands, so somewhere here you can have this thousand. Right. So first transaction, sales of good on credit. Cost is 60. Inventory will reduce by 60. We are getting a debtor, trade receivable of 80, and the profit of 20. Profit of 20. So I'll try to do it. Right. So I will do slowly. I'll try to finish it fast and calculate. Try to calculate the uh, cash balance and the profit. Return of goods sold on credit for 36,000. The cost of these goods were 30. This is the reversal of credit sales. We are getting stock 30. And The debtor will reduce by 36 and the profit will reduce by 60. So 30,000 worth of stock we are receiving from the debtors. Return. Then number 3, donation of goods costing 10. Our stock will reduce by 10. Donation is an expense. It will reduce the equity. Donation will reduce the equity. Right? Number 4, the maintenance expense of the business was 10,000. Of this, 60,000 was paid personally by someone and the balance was paid by the business. There is a small mistake. The maintenance was 10,000. This was 6,000 was paid. There is a small typing error. Right? So excuse for that. Yeah. Yes, this is not 60,000. This is 6,000. It was a typing error. Right. So 6,000 was paid personally by someone. So maintenance expense will reduce capital. Maintenance expense reduce capital, and 6,000 was paid personally. So it is an additional capital. Again, capital will increase. And cash paid, business has paid 4,000. So fourth transaction, cash minus 4,000, cash minus 4,000, capital plus 6,000, equity minus 10,000. This is maintenance expense. Number 5, obtained a bank loan of 300,000 on 1st of July 2015 at 12% interest per annum. Interest is not yet paid. 1st of July. So this question is year ending 31st March 2016. Year end is 31st March 2016. Financial year. Right. So, fifth transaction. Obtain the bank loan of 300,000. So first we have to record the bank loan. So what's the entry for bank loan? We are getting cash 300,000, and it is a long-term loan of 300,000. Then we need to calculate the interest. How do you calculate the interest? So bank loan interest equals 300,000 into 12% into number of months. So this was taken on 1st of July. 1st of July means 1st of July to 31st March 16. July, August, September, October, November, December, then Feb, March, 9 months. So you need to calculate the interest for 9 months. So 9-month interest, 300 into 0.12 into 9 over 12, it's 27,000. 27,000. So that is an expense. Equity will reduce by 27, and it is also payable. Other payable will increase by 27. Equity will decrease because it is expense. Interest. Due to interest, equity will reduce. So I can continue the rest. Number 6. Number 6 says purchase of a 3-wheeler for 280,000 on cash. 31st March 2016. So cash minus 280,000. Three-wheeler is a PPE plus 280,000. Number 6. Cash minus PPE plus. Settlement of, if you didn't understand anything and if you need further explanation of any of the transaction, please tell me. Okay. 7th transaction. Settlement of 30,000 due from a debtor against 50,000 payable to him as a creditor. Balance was paid in cash. Now we have a creditor. We have a liability to pay 50,000. 50,000 we have a liability to pay. And we pay 20,000 cash to him, and he is also a debtor. We set off against his debtor balance. So trade payables will be minus 50,000, and trade receivable will be minus 30,000. Cash will be minus 20,000. Debtor and the creditor is the same person. Let's say Mr. Pereira. He is our customer and he is our supplier as well. We have purchased from Mr. Pereira 50,000 and we have sold to him 30,000. So we will tell him, so you don't need to pay us 30,000, you keep it. We set off that against what we have to pay to you, 50,000, and we will pay only 20,000 cash. Right? Number 8. Payment of 20,000 life insurance premium of someone. Then cash minus 12,000. Capital minus 12,000. Is it expense or drawings? 12,000. Because this insurance premium is summons, so this is not a expense, this is drawings. Right. Okay. So, Vasanju has asked, repeat. Okay. Next transaction. So before that, I will again explain the transaction number 7. Transaction number 7, it says settlement of 30,000 due from a debtor against 50,000 payable to him as a creditor. So we have a person, right? He is our customer as well as supplier. We have purchased from him 50,000. That means we have to pay him 50 and we have to receive from him 30 because 50 is payable, 30 is receivable from him. Right? So without taking money from him, we will pay another 20 and settle him. We will tell that since we purchased 50 and we have to 30,000 he has to pay, we set off this 30 against 50 and we need to pay him only 20,000. So that is why trade receivables, he is a debtor, deducted 30 and cash paid to him 20 and his total payable will be minus. So I hope it is clear. Transaction number. Let me know if you didn't understand. Transaction number 9. Okay. Receipt of the amount due on transaction number 1 after deducting 5% discount. Transaction number 1 is sale of good on credit, 80,000. Cost of these goods were 60,000, so that is cost of sales. So how much we should receive? We should receive 80,000 from the debtor. This 80,000. Now he is paying us after deducting 5%. So 80,000 into 5%. 80,000 into 10% is 8. 5% is half of that, 4. So what is the value he will pay us? He will pay us only 76,000. So the cash received, his total amount will be minus. He will settle that fully. We will receive cash only 76,000 and 4,000 will be an expense. Is discount allowed. We have given him a discount. His total amount will reduce by 80. Cash received 76. Discount allowed is 4,000. In the last one. Transaction number 10. Receipt of 15,000 written off as bad debt during a previous year. So bad debt means we write off a debtor. We think that the debtor can't pay. So we consider that debtor as an expense. We deduct from the debtor and reduce from the equity as an expense. Now that debtor suddenly comes and pay his due, 15,000. So we are getting cash 15,000. And cash account, debit, cash increase. And this is considered as other income. We consider it as an additional income. Sudden income. So that completes in transactions. So let's take there's a question. Can you once explain the ninth transaction? So ninth transaction is receipt of the amount due on transaction number 1 after deducting 5% discount. So transaction number 1 is this. Transaction number 1 is we did a sales. So there is a debtor who need to pay us 80,000. There's a debtor who need to pay us 80,000. Now he is settling us. Receipt of the amount due. So amount due is 80. So we are receiving this 80 after deducting 5% discount. If you calculate 5% discount, 5% discount is 4,000. Right? So discount is 4, and you will receive cash 80. So his total amount will be deducted, the same amount here. He settled, receipt of amount due, fully settled, cash received only 7 receipts and 4,000 discount. So now it is clear. Another question, why do we add bad debts? Bad debt, now when we are receiving 15,000, right, this is a bad debt. Bad debt, what we do is we minus, when we have a bad debt, what you do is we minus 15 trade receivables, debtors account will be deducted, and it is an expense. It is treated as a expense in the income statement. Equity will be minus, right? Trade receivable minus, equity minus. That is how you record the bad debt. If it is recovered, we had 15 was there. For this will be settled. Now you don't have that debtor. Now he is coming from nowhere and paying us that 15. So we receive cash account increase, cash increase. And since we have deducted that from the income statement, we add back as other income. We add back that 15 as income. So the income, the profit also will set off. This minus 15 and plus 15, it will set off. Final net effect will be the debtor will be paid and the cash will increase. So I hope it is clear. Another question, in transaction number 4, why do we take 6,000 as additional capital? 6,000 as additional capital. So the transaction says purchase number 4. The maintenance expense of the business was 10,000. 6,000 was paid personally by someone, and the balance was paid by the expense. So maintenance expense is 10,000. That's expense. We paid cash for an owner from his pocket. He paid 6,000. If the owner paid from his pocket, if he spent from his personal money, it is an additional capital. Owner is paying from his personal money. So his personal cash was invested to business expense. So that is why we take that as additional capital. So there can be some other transaction which might say the debtors have directly paid to the owner. And what you do? The debtor has directly paid to the owner, not to the business. So owner takes that money. Then that will be considered as borrowings. Debtor will be minus, equity will be minus as borrowings. This is owner has personally paid. Then this will be considered as additional capital. So hope it's clear. If not, I will further explain in different methods. Right. Let's calculate the cash balance now. So question is, prepare this, then revised cash balance and revised profit. Cash is 50,000, profit is 600,000. Right. So cash balance before all these transactions, before recording all this, the cash balance was 50. Now we did adjustment. Opening balance was 50. We did all these adjustment. Now they're asking the closing cash balance. Closing balance. How much is the closing cash balance? 50 minus 4 plus 300. So the effect on this is 75. 75 is this opening balance is 50 and the effect impact of this transaction. Then the closing balance 125. So can you all tell me the effect on the profit? So we can say adjusted cash balance is adjusted cash balance. Can you all tell me adjusted profit is how much? Tell me adjusted profit. So adjusted profit you have to take from the equity. So on the equity, we have to take only transactions which affect the profit, either income or expense. So you don't take additional capital or drawings. Without taking these two, you have to take all other income expenses. Still, I didn't get the correct answer. Donation is an expense. So many answers. 574, 614, 554, 570, So take all now. What I have circled, don't take those two. Take the other ones. Don't take these two. So those transactions does not affect the income, net income. Does not affect the profit. So without those two, everything else will affect the profit. Because from plus 20, profit increase, profit decrease, donation, profit decrease, maintenance expense, profit decrease, interest, discount, income. Right, good. Now I got the answer. 578. So minus 20 equals 578. 578. I hope this question is clear. So let's do 2015. 2015. Narada opened a stationery shop in part of his home on 1st of March 2015 by investing 150,000 in cash. He also bought 60,000 worth of furniture for use in the business on this date. He opened a bank account in the name of the business and carried out all cash transactions through this account. The following transactions took place during the first month of operations. So there are 10 transactions and two additional informations are given. The telephone bill of the business for the month of March 3000 was received on 2nd of April 15. This is the month of March. And the property plant equipment should be depreciated on 20% per annum. This usage 20% from the cost per annum. When the required, using the accounting equation, show the impact of the above transaction from 1 to 10 with values and state whether each value increase or decrease in front of the value using the following format. Income statement of the business, composition of equity, opening plus profit, opening capital plus profit plus closings, the closing equity. So let's record this transaction. So using this format. Transaction, and we have PP, inventory, trade receivables. Here it's bank, trade payables, loans. Okay. So let's record transactions. Purchased stationery items. Before that, we had so can you start doing it? Okay. So record the transactions. Yeah. Transaction number one. Purchase stationery items for 100,000 on cash. So bank, all the transactions will be recorded to the bank account. And stationery is the inventory. Inventory increased by 100,000. Then sold stationery items with a cost of 700,000, 70,000 for 100,000. Then inventory will reduce by 70,000 and they will receive cash. This is not credit, this is cash. 100,000 and the equity will increase by 30,000. 70,000 worth of stock sold for 100,000 in cash. Number 3. Purchased stationery item for 150,000 on credit. Then we are getting 150,000 worth of stationery on credit means creditors will increase by 150,000. Return 30,000 stationery item to the supplier due to defects. Then payable will be minus and inventory will be minus. Inventory will be minus. Then transaction number 5. Transaction number 5. Purchased a computer on 15th of March, 120,000 on credit. This period of 8 months. This depreciates. So this amount is payable over period of 18 months. So we are getting PPE 120,000 and this is a loan 120,000 payable in 18 months. Then number 6. Sold stationery items with a cost of 100,000 for 140,000 on credit. So our stock will reduce by 100 and trade receivable will increase by 140. Trade receivable will increase by 140 and the equity will increase by 40. So there's a question asking, shouldn't we record the opening balances? No, because in the question, they are saying using the accounting equation, show the impact of the above transaction from number 1 to 10 with value increase or decrease. Use the following format. So they are asking transaction number and this transaction. So they're not asking the opening balance. Transaction number wise only they have given all this. And this 1st of March. And these are, we don't know this, the dates of this. But anyway, if you write the opening balance, that is not wrong. Okay. Even if you write the opening balance, it is not wrong, it is correct. In the question, they expect in the answer transaction number 1 to 10. Number 7. Number 7, paid 15,000, the monthly salary of the office assistant. So bank will be minus, and it is an expense. Salary, equity will be minus. Equity will be minus. Obtain 30,000 from the business for personal use of Narada. So the owner has taken 30,000 for his personal use. So bank balance will reduce and the equity also will reduce. This is drawings. And number 9, paid the stationery supplier subject to 5% discount on the outstanding balance. So how much will you pay for the stationery supplier? So supplier is this trade payer. We purchased from him 150,000 and we returned goods due to defects 30. So the amount we need to pay him was 120. The amount we need to pay him was 120. Then, subject to 5% discount, we are paying the outstanding balance. So we are getting 5% discount on this. 10% is 12, 5% is 6 discount. If you are getting discount 6, how much will you pay? You will pay 140. So cash paid 114 and the equity is full amount will be settled 120. This full amount will be settled and the 6,000 is discount. It's a discount receipt. It's a discount receipt. Okay. Then the last one, number 10. Receive the amount due from debtors after allowing 5% discount. Now we have only one transaction for trade receivable, 140. So from 140, we are receiving 5%. 10% is 14, 5% is 7. So discount is 7. Discount is 7. And this amount will be deducted 140 then cash received is only 133. Receiving 133 from trade debtor, 7,000 is discount. Let's copy. Six months. See the messages. Let me check. Explain adjustment number 9 from this. Adjustment number 9. Paid the stationery supplier subject to a 5% discount on the outstanding balance. So we need to find out outstanding balance for the supplier. Paid payable is supplier. Paid payable is the supplier. Right? So outstanding for the trade payables. We have purchased 150,000 worth of goods from him, purchase. And there is a return outwards of 30,000. Due to the defect, we return. So the net amount that we need to pay him is 120. We need to pay him 120. Purchase 150, return 30. So 120 we need to pay. And when we pay this 150, we are getting 5% discount. So how much is 5% discount? 6,000. So after the discount, we will pay only 140. So creditor was settled. Creditor was fully settled by paying 114 and discount is received 6,000. From 120 we get a discount 6,000. So the creditor's full amount will be deducted because full settlement, and this is a discount. So I hope that's clear. Any other doubts? Same thing applicable for trade receivables. The last transaction number 10. Received amount due from debtor after allowing 5% discount. So there is a debtor. This is the only debtor we have, 140. We are giving 5% discount. So if we give 5% discount is 7. And receive only 133. Receive only 133. So this amount will reduce cash 133, and this is discount. Right. Okay. So moving back to the question. Then the question is income statement of the business. Right. So let's prepare the income statement. including these two adjustments. There are two additional information. Telephone bill of the business for the month of March amounting to 3,000 was received on 2nd of April. This is telephone bill payable, and depreciation is 20% per annum. So these were not asked to do it in the in this table. They are asking to do that when calculating the income, when calculating the profit income statement. So later I will explain the in the other chapter I will explain the correct income statement format, but here I'll just show you how we prepare the income statement. Income statement means income minus expense. From the income we deduct expenses. So in the in our transaction table, without drawings, we have to take everything else. So let's draw an income statement. Inside the table. Sales calculate the profit. It is not a must to balance the accounting equation at last. If they have asked, then you can do it, or else you can just do whatever they say. Additional efforts, no need to put. If they ask, we can do it. So here, sales minus cost of sales. Then in the next class, I will explain this full format. From the sales, we deduct the cost of sales, and if there is any other income, we will add, and expenses will be deducted. This is how we prepare the income statement. So our don't worry guys, later I will explain this income statement. Let's see today if I have time, I will explain. So sales minus cost of sales is gross profit, plus other income minus expenses will be net profit. This is how you calculate the net profit of a business. So we have sales. What is our sales value? We did a sale of 100 and another sale of 140. So total sales value is 240. Total sales value 240. Then cost of sales. Cost related to these sales. How much? You can take one is 70, the one is 100. 170. There is another way of getting this. Once I explain the income statement balance sheet, I will do that as well. That is opening stock plus purchases minus closing stock. For purchases on the return and we take the closing balance. Here, in this question, it is very simple. And the gross profit will be 70. Gross profit will be 70. 240 sales. Cost of sales 170. Gross profit is 70. Then we add other income. We have to take from the equity. All this I'm taking from the equity column. So there is other income, discount receipt, 6,000. Discount receipt 6,000. And expenses, there is salary expense and discount allowance, 20. And also these two, telephone bill and depreciation. Expenses, I'll show the expenses. We have salary, salary 15, discount allowed 7, and there is a telephone bill we didn't pay, 3,000, which we didn't pay, but it is payable. Telephone bill 3,000 and depreciation. Depreciation 20%. So depreciation equals PP is 120,000 into 20% and into only 1 month. PPE depreciation or depreciation of computer. 15th March, not 1 month, then it is 15 days. It is 0.5 of that. So if you calculate 120 into 20%, answer is 1,000. So total expense comes 15 plus 7 plus 15 plus 1, 20 6. So we have one more. The owner has also bought a furniture worth of 60,000. Depreciation, computer, depreciation of furniture. Depreciation, furniture. 600,000 into 20% into 1 month. $60,000. Furniture depreciation is 60,000 into 20% into 1. So that gives another 1,000. This time. 76 minus 27. 76 minus 27 is 49. Net profit is 49. Then finally they are asking capital, this one. Opening capital, profit or loss, less borrowings. So opening capital, the amount he has invested. He invested 150 plus 60. He invested 150 plus 60. That is 210. We invested 210,000. The profit we calculated, it was 49. We calculated the profit 49. And there was only one drawings, it was 30. Is minus. In the equity, 210 plus 49 minus 30, 220. Right. Right. So we did few the main introduction part and few questions. Right. So other questions, what I'll do is I will make some videos. Right. I will make some videos for all other past paper questions and upload in YouTube and send you the links. So you all can check the answers to that. And if you all have further doubts, questions, you can always contact me. Right. So the next schedule we have any other doubts? So I can give you some time. This is the 60,000 purchase of furniture. That's that. The furniture is furniture. It is not the purchase. It is the owner's investment. In this question, owner has invested here. Narada opened stationery shop. He invested 150,000 cash and he also brought 60,000 worth of furniture. So it is his investment, 60,000. So it is not a transaction done in the business. It is his investment, initial investment. Any other doubts? And try to do other questions and clear any doubts if you have. And also now I have sent the MCQ. See, I sent through the WhatsApp as well. Here, if you go to the assignment, this is the assignment. Once you fill all this information, only the email address is compulsory. Other ones you can add. Now see, easy, but revise all your knowledge on the basic. Now to take, what is the answer for the first one? Can you tell me? This C, right? So likewise, you give the answer and see. I want you all to take all 20 marks. You do it today. Right now, after I finish the session, try to do it because only 20 questions are all 20 very easy, right? Not hard. Easy questions. See if you all can get 20 out of 20. Right? So if you get less than that, see what are the what are the wrong answers that you all gave. A very basic question. And similarly, I will put more questions once we do other sessions as well, because it takes a lot of time to prepare this Google Classroom schedule. Right? And you can use this. I will share all these details, and we will continue the classes like this. There is one few requests that to have the class on weekend, because my classes are scheduled on Mondays and Thursdays. So there are few requests where students wants to have it on weekend. So I was thinking that if we can do Saturday and Sunday, maybe night, like 8 to 10, 7:30 to 11. So likewise, night time, I'm okay to do it. If many of the students are okay, I can do this time as well. Right? So if you all have an idea, just drop me a WhatsApp message. So we will think based on that, because most of the times weekdays there are other classes and school exams and all, everything is there. So if you are thinking that you all want to shift, then let me know. We'll see if there are more numbers. We can do that, or else we will continue with the same. And yeah, is there anything else? And the other classes, we will, once you register, I think our class fee schedules and all we have sent. Once you register, you will get a registration number. So we share that document which has all the details, right? So you can pay either monthly or the full course fee. Once you pay it, you will get registration number. Then you will get the login access to this Google Classroom, where you have all the relevant materials, videos, mind map, and everything that will be uploaded and it will be sent to you. And if anyone is unable to pay or have difficulties, please you can always drop me a message. So I will do whatever possible ways that I can support them. Right? Don't worry. Don't make the finance as a barrier to education. If you need any help, anything, you can always contact me. Uh, like we are trying to help as much as possible, uh, all three subjects, right? So we put a lot of effort on preparing all these online sessions. So take the maximum benefit out of it. Try to get a good result, right? Make your parents proud, make your teachers, school proud. So open for any questions. So there is no doubts, nothing. So I hope today's session is clear. So next session we have to do is on 21st, that is on Thursday, same time, 9:30 to 12:30. We will be doing double entry system and the ledger accounts. And this is the most important session because everything else in your syllabus, everything else in accounting is based on double entry system. So I will take some time to explain. And another important message I want to say: if anyone didn't understand or if they need more support, always you all can WhatsApp me, message me. We will have a separate session on whatever difficult areas that you all have. That is not an issue. Right? You think you didn't understand this chapter, counting equation, you didn't understand. So if you want, let's say, further explanation, or if you want from the beginning, because I assume that you will have basic knowledge and you all can understand. If you think you are below that, uh, just drop me a message. I will help you all individually. That is not an issue. Okay. And if anyone doesn't have my number, you all can send a WhatsApp message to this number. So any support, right? Okay. So I hope all clear. So we'll wind up today's session. Thank you very much for participating. Um, we'll continue all other chapters in the same way. We will try to do much as possible. If we can improve the sessions, if you all have any ideas, suggestions, you all can always tell us because this is a time where we are doing everything new. All these sessions, all this planning, all whatever we do, it is new to us as well. Right? We have done physical classrooms, but this is the first time we are doing online. So there might be issues, problems. We can improve a lot of other areas. If you all think better solutions, better ways to do, please let us know. Okay? So thank you very much. So we'll see you on Thursday.